Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of British Pound, Japanese Yen, GBP JPY. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis. And do not forget to check out the Forex analysis playlist for the analysis of other currency pairs. So let's get started. So this is the 4-hour chart of GBP JPY, British Pound, Japanese Yen. And as we all know, currency pairs like Euro USD, GBP USD and GBP JPY saw heavy selling pressure previous week after the FOMC meeting when dollar became very strong. And the good news is that after the market opening on Monday, almost all the currency pairs are trying to recover. Whereas currency pairs like Euro USD, GBP USD are trying, but British Pound, Japanese Yen, GBP JPY has almost recovered by 50%. You can see that it has almost crossed the 50%, okay. And therefore we can just imagine the power of the buyers. Okay, they are just trying their best to take the price upward. They are just trying to recover the loss they had to suffer in the past week. And you can just look at this candle and just imagine how desperate they are. Okay, and and the good news is that market has not gone down. In fact, market has not seen the previous week's selling pressure. Okay. And if we look at the weekly chart of British Pound, Japanese and GBP JPY, then we can see that this week market has formed a green candle with price rejection from below, which is a very good thing, which means that sellers tried to push the price downward. Sellers tried to push the price downward, but buyers were present, or buyers are present in the market, and they did not like the price, and they just push the price upward, which means that at this moment buyers are stronger in comparison to sellers. Okay. So which is a very good thing. So right now it looks like that right now the the buyers are dominating the sellers, okay, at this particular point, right? And if we look at this present chart formation or chart setup, then it looks like that market has formed almost a V pattern. And as I always say, for a trend reversal, okay, we need a V pattern. We cannot consider a chart as a trend reversal. Okay, we cannot consider a trend reversal until and unless we get a V pattern. But in the GBP JPY chart, we have our V pattern. Therefore, we can consider this as a trend reversal. On the other hand, I'm not considering this as a retracement or pullback because just look at these three green candles, okay, and just try to imagine the power of the bulls. So in a retracement or a pullback, we do not get candles like this, okay. Therefore it looks like a trend reversal, but that does not mean that this is the ideal position to go for a buy order or you should buy. Because if you remember correctly, then I always say, or I always mention these three alphabets: AOV, area of value. As I always say, before executing any order, we should always try to find the area of value. Area of value means the best trading opportunity or the best trading spot. Here, if you go ahead and buy here, if you're planning to buy here right now, then your stop loss will be somewhere around here below this level. Don't you think you're compromising with the trade? What I'm saying? Don't you think you're compromising with the trading discipline? Don't you think you're compromising with the risk to reward ratio? Yes. If you buy here seeing these candles, then your risk to reward ratio does not match. Because if you buy here, then there is a possibility that 50 moving average may provide resistance or may act as a resistance. Whatever whatever still this gap is too much. And your risk to reward ratio does not match. Therefore this is not the ideal position to buy. Then what is the best position? See, looking at the present condition of the market, or if you look at the present buying pressure of the bulls, then there is a very less chance that market will come down to this particular level so that we can go for buy order. Okay, the chance is very less that market will come down and test this level, one 51.5 level. Chances are very less that market will come and test this level. Therefore, the only way here is to keep your eyes on stochastic RSI. Okay. I'm a fan of stochastic RSI, or I have been using stochastic RSI indicator for a long time. That's why I use stochastic RSI. If you are familiar with any other indicator, then you can use it. Okay, but just you need to make sure that you are going for buying order only at the oversold zone. Okay, you can see that right now market has almost reached the overbought zone, and this is not the ideal position. So wait for the market, or wait for the stochastic RSI to come down to the oversold zone. When stochastic RSI will be in oversold zone, then just look at the condition of the price. Look at the price. If you see that price, okay, the market is still being dominated by buyers. If you see that buyers are still there in the market, if you see price reversal from below, price rejection from below, if you see hammer kind of candles, then you'll get the confirmation that yes, buyers are still there in the market, and we can go for buy order. Once market will move from the oversold zone, then you can go for buy order. Otherwise, there is no proper level here. And as we all know, after the heavy sell off previous week, almost all the support levels are shattered. There is no proper support here, and market is not coming down to the support level. Okay, therefore, only way is to grab the market at the oversold level. So this is it. Hopefully you have understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See ya tomorrow.